Damian, the ruble is cratering. Credit default swaps now signal a 56% chance of default.
Is that all?
Where do you put the odds?
Well, I mean, look, 5-year CDS in Russia is now at 1,000 basis points. To be clear, Ecuador, which is a serial defaulter, 900 basis points. Turkey, which has been the whipping boy of emerging markets for the better part of the last 2 years, only 580 basis points. So clearly, the market is putting a very high probability on default. And you see S&P and Moody's towing the line as well. I mean, S&P just downgraded by 2 notches to BB+, and Moody's has them on negative credit watch. So look, Russia, for all intents and purposes, is off the mark. And everything we're looking at in terms of dollar ruble, 98, it was at 112 earlier.
Yeah.
Forget it, is not reflective of a clearing price given the sanctions and given the constraints. So take it off your screens. Dollar ruble is meaningless in this market. I think what we have to look at is not all the, Japan and Australia joining the U.S. and West as in sanctioning Russia. It's those who haven't been, and specifically Turkey, India, China, the UAE and Saudi Arabia. We are looking for what comes next. This is their time on the geopolitical stage to make a stand here, and we're not seeing that. Certainly India, which has relied on Russia for all its military, all its technology, and in the case of Turkey, they've shipped drones and military technology to Ukraine. Why are they not stepping up here in solidarity with Ukraine? We're going to be waiting to see more color on that, Kaylee.
Can we just talk a little bit about what is China's next move here, Damian? Because I read a lot over the weekend talking about the yuan, maybe effectively the currency of the commodity market going forward, as effectively traders try and get hold of yuan in order to go effectively via China to be able to access Russian commodities. How realistic a prospect is that? Well,
I think in time, Guy, the yuan does have, some reserve value in terms of having, real reserve value for central banks globally, but we're not there yet. And look, the reality is the meeting between Xi and Putin pre the Winter Olympics, it almost makes Xi look complacent, like he may have known something before the fact. At least that's what I'm hearing from my sources, and that is not a good thing. You already know CGBs in China are considered to be, sort of a separate asset class within EM. Some people are explicitly putting in policies to limit their exposure to China. Whether or not that continues remains to be seen. But, yes, I agree with you that the yuan has reserve value, but, China just, they need to step it up here. I mean, they could put a stop to this all at once if they so chose. We just haven't seen anything out of them yet. And don't be fooled by some of the, letters of credit on oil that ICBC and, are kind of scaling back. That has everything to do with counterparty risk management and everything to do with the sanctions from the West. It is not a stance on what China believes who is in the right in between Ukraine and Russia at this stage.
And to go back to Russia specifically, Damian, obviously stocks are not trading on the Moscow exchange today. The Bank of Russia just announcing there will be no morning or evening trading for the rest of the week, March 1st through 5th, and FX trading on the Moscow exchange tomorrow, Tuesday, will take place from 10 a.m. to 7 p.m. Obviously, the Bank of Russia stepping in today, trying to control capital flows, more than doubling to 20%. Is any of that going to be effective?
We're in uncharted territory, Kaylee. I mean, I've never seen anything like it. But yes, I mean, it should be somewhat effective. It's more the capital controls which are going to be effective in preventing, dollars from moving offshore. They need to keep dollars in-house. We see that in FRA OIS spreads. If you're looking at that, if you're looking at dollar-yen or euro-dollar cross-currency basis swap spreads, they're all showing significant, red alarms in the sense that, conditions are getting tighter and there may be, supply bottlenecks. We know Zoltan Pozsar wrote about this. I don't know if it's going to be long-lasting. I don't know if we're going to see something along the lines of what we saw in March of 2020, but certainly it's catching everyone's attention now. And yeah, financial conditions are tightening, and it's going to have, some sort of calculus, I think, on the FOMC going forward over the next few meetings.
Damian, is Russia now in the same bucket as Iran, as Cuba, as Venezuela? And if so, what muscle memory do financial institutions have from dealing with those countries, or more specifically, not dealing with those countries? Presumably, it's not kind of act and then figure out afterwards. It's let's not act, and then we'll try and work out whether something's possible. Can you just walk us through how financial institutions are going to be thinking about how they're going to deal with Russia right now and what lessons they will have learned from these other countries?
I mean, Guy, at this point, financial institutions are just looking to assess their exposure to Russia. But you're absolutely right. If you look back at 1998 during the Yukos debacle, Yukos didn't need to default, but they did, right? Because, quite frankly, that was the choice of the government. And so, look, it's by choice here. I do believe, though, yeah, you're absolutely right to bucket Russia with Syria, with Iran, with Venezuela. It makes sense in this environment, and don't be surprised, given what we've just done, the sanctions, effectively, Guy, I consider that to be almost a de facto act of war, the way it's going to destroy their economy and plunge them into a deep recession. So, what's in Putin's playbook? It's going to be moving, perhaps military weapons closer to NATO states. I think of Cuba, I think of Venezuela. It's going to be cyber attacks, aggressive cyber attacks, and it's going to be the beginning of, quite frankly, military spending across the board is going to go up. We see that in Germany. We're going to see that in the U.S. and across the board, Japan as well. Yeah, it's going to be a very different world going forward, unfortunately.